You know, I hope Netflix recovers. Hulu and Chill just doesn't have the same ring to it. Hey there, folks. So this is another case where something has happened that I'm like, I have thoughts on that. I'm going to talk about that. And this time we're talking about Netflix. Netflix has had about week and a half by the time this actually goes live. At time of recording, they've had a bad 5 days. But they issued a quarterly report to their investors, having to admit to the fact that they lost subscribers globally for the first time in 10 years, and their stock plunged. I'll get into some of the specifics of the numbers in a little bit, but this begs a lot of questions. How did this happen? Why is it so sudden? What happens next? And was this kind of inevitable? Spoiler on that last one. Yeah, it was. Although the timing wasn't necessarily inevitable. The event was, though. But we'll build up to that. We got to lay some groundwork first. Okay, let's talk about what happened. On 4/20, of all days, Netflix had its quarterly update on how the first quarter of 2022 went and told its investors about the fact that they lost 200,000 subscribers globally. Now, that's actually not that many, considering how huge Netflix is. But as I said, this was the first time they'd ever lost subscribers, basically since they became a streaming service. So the results on that were immediate. By the close of business on the 20th, their stock had settled at a 35% drop. And this despite the fact that Netflix came in with explanations for why numbers went down, plans for how they were going to try and raise numbers and up revenue. It's not like they went, we don't know what happened. They knew what happened. They were upfront about it. Didn't matter. There's some quirks to the stock market. I'll bring that up a little bit. It is worth noting, though, that while this was what grabbed all the headlines, this is not Netflix's first big stock plunge. It's not even their first big stock plunge this year. At the end of trading on the 21st of January, they were down 22%. Now, I couldn't exactly nail down what the heck happened on that date. I probably could if I kept searching, but the specifics honestly didn't matter. But the fact that this wasn't their first major drop, that does kind of matter. And more than that, they've actually been declining for a little bit. Netflix hit its peak, its highest stock price in November. But ever since then, it has been going down. Now, these drops were really huge, and it had just been kind of more steadily declining prior to that because, well, reality has been catching up with Netflix. And prior to November of last year, they had been steadily going up basically since their creation. But that train ride appears to be over. So let's talk about what happened. The first thing is there was a very direct and immediate impact, which is that Netflix cut off its service to Russia in a response to what is going on in Ukraine, which is something a lot of companies did. They stopped doing business in Russia. And for Netflix, that meant 700,000 subscribers immediately gone. Now, if you're going, well, okay, so that accounts for the 200,000. It does, but it's a little bit more complicated than that because they weren't projecting to be flat. They weren't projecting any kind of loss. They had been projecting growth. More to the point, they had projected to grow 2.5 million subscribers in Q1 this year. So even if they hadn't shut off Russia and lost those 700,000, while they wouldn't have been down globally, and that became the big headline, but that wouldn't have happened if it hadn't been for the Russia thing. But even if that hadn't happened, they still came way short of the growth that they were supposed to do. And they're now projecting a loss of another 2 million subscribers. Now, despite this, revenue is actually up 10%. I'm not entirely sure how, but that's what's been reported. It's currently sitting at $7.87 billion. But even that, despite being up 10%, is shy of what it's supposed to be. It was supposed to go up to $7.93 billion. And that's revenue. That's not profit. Profit is down. Their profit had been $1.7 billion annually. It's now down to 1.6. Now, this is where I need to get into some of the oddities and stupidity of the stock market. And yes, I'm going to say stupidity. I've talked about businesses, entertainment corporations, etc., multiple times on this channel over the years. I've even talked about, massive scrambles, reorganizations. I don't talk stock price. And I don't do it for a number of reasons. The big ones being, I think the stock market is stupid. It's gambling that for some idiotic reason we have tied massive swaths of the economy to. But beyond that, what I really want you to understand, accepting that I'm not a stock market expert, but here's something that is really important to wrap your head around. The stock market doesn't really respond to reality. It responds to the perception of reality. And perception is really easy to manipulate, as is evidenced by the letter that Netflix itself sent out to its investors. In a company letter, they noted that the COVID bump to not only Netflix, but all streaming services in 2020 and 2021 basically papered over existing flaws that were already there and didn't go away with the big subscriber bump. They were just waiting for the bump to no longer offset them. So the reality has been Netflix has been in trouble for a bit now, actually, but it's only when the perception finally gets shattered that their stock drops. And it's why it drops suddenly in a day as opposed to gradually over time, even though it was also doing that. But stocks are, as I said, they're idiotic. And the other thing that you need to realize is I noted, profit, revenue, growth. Here's the other thing you really need to understand. And again, I'm boiling this way the hell down. But at some point in your life, if you haven't already, you're going to realize that whatever fundamental notions of economics you might have learned in school, the idea of, you make more money than you spend, that's profit. So you're a profitable business, that's good. That's not the economic reality we live in, not when investors get involved. Investors don't want profit, they want growth. It is not enough to make more money than it costs to run your business every year. That is not enough. You have to make more money than you made last year, every single year, if not every single quarter. You're expected to make more and more and more, because that's where stock value is. Stock value on a stable company, it's just steadily moving along. It's got consistent revenue. It's got consistent profit. It's totally stable. That's worthless stock. Stock is only worth money if it keeps going up. And the only way to make it go up is to bring in more, year after year, every year. I had my wake-up call on this at, it wasn't my first job, but it was the first job that I kind of took seriously and was I might be at this for a little while. I worked at a Barnes & Noble out of college. And I remember I think we had just wrapped up the year, and the regional manager or somebody at Barnes & Noble had come in. Now I realize this was back before e-readers, so Barnes & Noble was doing pretty well. And he came in and he told us, you folks just had the best year that this location has ever had. And then in the very next breath, he said, but you were behind what you were projected to do, so you've got a lot of making up to do. This is not okay. We're not happy with this. Think about that contradiction. This is the best this location has ever done, but it wasn't the growth we projected, so it's not good enough. It's bad. That was an immediate wake-up call to me on the reality of things. And I had that hammered into me again in the job that I had before I was lucky enough to be able to have this be my living, which was that I worked in sales. And every year I had to give a projection for what I expected my sales numbers to be. And every year I had the same back and forth, which is I made a realistic projection of what I actually realistically thought I could do, maybe even cushion a little more, thinking, well, maybe I'll get lucky and do a little bit better than I think. And then every year it would come back and they'd say, this has to be $100,000 higher. We have to round this up to the next million. This has to be more. And I always had effectively the same conversation, which is, so you want me to lie to you? Because you want me to put down a number that I don't think I can hit, simply because that's what you have to tell investors to keep them happy. Because this is the thing you have to realize. Investors have not only more power, more clout, they have also way more protections than consumers do, certainly than employees do. Capitalism sucks, if you weren't aware. But anyways, let's get into this a little bit more. So with something like Netflix, I said they were always going to have this problem because there's a limited number of people on the planet. Just logistically, eventually you are going to have everyone who can be subscribed to you. And if you're thinking, well, they've got like, what, 200 some odd million subscribers? There's almost 8 billion people on this planet. They've got plenty of room for growth. Yeah, but okay, let's actually break that down, because it's not every single person that is a viable customer. It has to be someone who has reliable electricity, a television, internet access that is high enough speed to be able to do streaming. They have to be able to afford that internet access. They have to have enough disposable income to be able to afford the monthly fee of Netflix. They have to have the desire for what Netflix is offering them. This is a lot. This is going to severely narrow down the actual viable pool of people who could be purchasing their service. So they were always eventually going to hit the ceiling. This is actually the reality of any company. This is a big part of why companies, when they get to a certain size, just start acquiring other companies. This is why Disney does things like buy Marvel or buy Pixar, because they have kind of hit the ceiling on the growth of the Disney brand itself. Like, these parks can only get so much bigger. The revenue from the various Disney channels and from the released Disney films, it's gotten about as high as it can get. And while maybe they can keep tweaking a little bit, that growth is going to slow. The way to energize it is to buy something that has more potential for growth than what their current assets are. So you buy Marvel, you buy Star Wars, and you grow those because those have more room to grow. But eventually everything hits a ceiling. Eventually everything, whether it be a case of, look, as many people as are ever going to want this have already bought it, or whether it's a case of consumers are sick of it, whatever the reason, eventually every product, every brand, every IP hits a ceiling. Investors don't care. When you hit that ceiling, that's when they bail. And that's where companies start taking on water. And things like this happen. Now, has Netflix truly hit its ceiling? I don't know. Probably not. But let's also be clear, Netflix has been doing some questionable things. Netflix has been actively running up debt for a long time. Up until last year, Netflix was borrowing billions all the time. Last year they stopped. They finally stopped acquiring new debt. Now, this is not necessarily a criticism of them initially running with debt, because, I mean, to do what they were planning to do, they needed startup funds. And there's what you get from investors and the like, but also sometimes you need really liquid income right now. You need stuff that you can work with if you're going to get all these license deals, to have all these things, if you're going to start making your own original content, if you are going to be hosting the servers for all this content to be able to even up and run. Yes, they needed the money. But they kept borrowing, and they kept borrowing very large sums for a very long time until they just kind of stopped. Now, at a guess, stopping last year like they did, I strongly suspect that they realized that the day of reckoning was coming. And the worst thing that they could do was run up more debt when they weren't sure that they were going to be able to maintain the kind of growth that they had. Of course, they were still projecting to their investors that they would keep maintaining that growth because, like, maybe you'll get lucky and you will hit that growth. You almost never tell investors that you're going to lose money in the next quarter unless it is an absolute definite fact. But I strongly suspect Netflix, despite their projections that they were going to gain 2.5 million subscribers in Q1 this year, I suspect that they probably knew that wasn't going to happen. They were just hoping because maybe a miracle would happen. Maybe they'd get there. It didn't. And now they have to own up to, we're probably going to lose another 2 million. Because that sounds like a real sudden thing to happen out of nowhere. It's like, no, they knew this was coming. They just weren't going to admit it until there was no way for them to hide from that fact. And they've now hit that point. There's also some questions about Netflix's spending. Netflix has been throwing a lot of money around in the last few years. They have been deliberately courting major Hollywood talent with the likes of Michael Bay, Zack Snyder. They've been doing Oscar push. They started winning Oscars in 2017 and have reliably picked up a couple every year since. The upcoming season of Stranger Things, they spent $30 million per episode. 9 episodes, that's $270 million. They spent the production budget of Batman v Superman: Dawn of Justice on one season of Stranger Things, a show that, by all indication, is ending. And anyone who was going to be subscribed for the sake of Stranger Things probably already is. And, like, keep in mind, I don't make that comparison to Batman v Superman idly. When that movie failed to make $1 billion at the box office, one of the largest entertainment corporations in the world went into a freaking panic. Warner Brothers was scrambling, trying to figure out what went wrong and how to fix it over something that they made with that kind of budget. And Netflix threw it at one season of television. Netflix has a number of things that it's kind of been battling with for a while, but it's been managed to kick these cans down the road. For one thing, I talked about the limitations for their actual viable subscriber bases, places that have the internet, the economic resources, the streaming capacity, et cetera, et cetera, et cetera. There's another thing. They can't just start dropping their movies into theaters to try and get more money that way. They would love to, don't get me wrong. But the thing is, most theater chains won't carry Netflix films. Not because they can't, because they won't. Because theater chains hate Netflix. They hate anything that makes the home viewing experience a viable substitution for going to the movies. Now, granted, COVID threw this all out of whack, and we had some very strange things, like when Warner Brothers took every single movie that they were planning to release in 2021 and release it simultaneously on streaming and in theaters, and boy, did that tick off, like, everybody in the business world when they did that. So, like, things have been weird the last few years, but even before that, Netflix can't get their stuff into theaters, so they can't grow that way. So how can they grow? Well, this is where we get into some other stuff that came out when they had to announce their numbers and talk to investors about what they were going to do. They're now talking about adding a less expensive subscription price that would include ads. So there's that. And they're talking about cracking down on shared passwords. So this kind of illustrates in many ways what happens when a company hits the natural ceiling of their product, but still needs to continue growth. Because for years, Netflix has not had to run ads. Netflix didn't really care about password sharing between households because they didn't have to. Now, these actually became massive selling points for the company. They were nice bonuses. They were, they don't have ads on this. Well, that's great. There shouldn't be. We're paying for it flat out. So yeah, there shouldn't be ads. But, also they don't crack down on this thing. Oh, that's nice. They didn't crack down on it because they could afford not to. Well, they can't afford not to anymore. So despite as consumer-friendly a thing as it would be to simply just let it slide as they have been, they can't afford to be consumer-friendly anymore. Because, as I said, they've either hit or are within sight of the natural ceiling of how many people they're actually going to get subscribed. So what has to happen now is figuring out how to maybe get a few more people in at a lower price, with ads. I would not be shocked if the ads thing, if it doesn't bring in that much, that what they end up doing instead is making ads the default on the current price and creating a premium to get rid of them, kind of like what YouTube Premium is. I would not be surprised at all, because I can't imagine they're going to get that many new people with this subscription but with ads model. So I would not be shocked if in a year, 2 years, they force it. They take the current subscription price and say, okay, at that, you also have ads. You don't want the ads? Give us more money. And the other way they're going to milk more money out of their subscriber base, in theory, is to crack down on household password sharing. Now, they claim that there are 100 million households that are using a shared password. I don't know how they came up with that. But we're not going to get into methodology. Let's just assume, for the time being, that it's true. They have the potential to be making the same mistake that people make when they claim that piracy hurts the box office returns of a movie. They are making the assumption that every stolen or borrowed account is a lost sale. Much like how industry advocates will claim that every pirated copy of a movie, a video game, etc., is a lost sale. That's not the reality. Well, it's definitely not the reality for piracy, at any rate. Studies have shown that most people who pirate, if they can't get something through piracy, they'll get something else. It's not that they will pay to get the thing. They'll just go pirate something similar that they can get. At least that's enough of a percentage that, like, you definitely can't assume these are all lost sales. Some of them, sure. Not all. Probably not even most. And I wouldn't be surprised if that ends up being the situation with shared passwords as well. Because this is another thing. Netflix has hit its ceiling, but a lot of its other rivals haven't. I'm not sure Hulu has. Disney Plus probably hasn't. HBO Max hasn't. And if other services don't have to start cracking down on password sharing, well, maybe if you've been sharing somebody's Netflix password, you give it up and just share their Disney Plus password instead. Or you just share their HBO Max or their Amazon Prime or what have you. Now, we go far enough down the road, eventually all of these will hit a ceiling, or they will simply decide collectively that as an industry, we're going to make this the new standard. That happens sometimes. That happened in, like, say, for instance, the airline industry. I forget which airline started it, but when they started charging for checked bags, that didn't used to be a thing. And then they started charging, like, for even your first checked bag. And then that sort of thing became the standard, not because they had to, but because when other airlines realized, oh, if we all do it, then we'll all get a piece of it. Instead of saying, hey, we don't do that as a selling point, they all went, well, let's all get a piece of that pie. Let's all do it. So that could potentially happen. But until it does, this is going to be a knock on Netflix, because Netflix now looks less consumer friendly, which they're going to have to, because as I said, consumers don't actually matter. The investors do. Consumers only matter insofar as they keep the investors happy, because the investors pump in more money. So where do things go from here? Well, I have to imagine Netflix is going to have to start cutting some stuff back. Like, they can try all they want to crack down on shared passwords, add a fee to that, try and get people to subscribe in a household where they're using a borrowed account. They'll get a little, but it's not going to be that much. I don't think it will be anyways. Not enough to recover what they've lost in terms of their stock value, because they've gone from looking like the monolith, going from strength to strength, and just look at it go up into the sky, to the moon. But now everybody sees the cracks in the armor. Now it's like, how are you going to patch up this boat? And they are probably going to need 1 to 2 years of solid, super sustained growth on whatever it is they're going to do to try. And I don't mean stock growth. I mean growth of revenue and or profit, preferably both. They're going to need 1 to 2 years solid increases on all that before their stock will really start to recover from this, because right now it just looks like a leaky ship. And it's hard for companies to turn that around when the thing that appears to have sprung a leak is the fundamental core of the business. Because, you know, Apple can lose stock because a new iPhone comes out and doesn't sell what it's supposed to. They can, they would. But, like, that's not all that they are. If Netflix has to admit to losing subscribers, that's what Netflix is. That's the entire core of the company. It's what everything is built on. If that's hemorrhaging, well, as I said, stock buyers respond to the perception. And the perception is that party's over. The reality, who knows? All that debt they've run up, that has the potential to really bite them in the ass. Am I foretelling the doom of Netflix? No, but their time as the monolith is over. And I don't think we're ever going to see another streaming platform become as monolithic as they were. Because part of the thing with Netflix is for a while, they were basically the only game in town. Everything used to be on Netflix. Then there was Hulu, then Amazon Prime, Disney Plus, HBO Max, Paramount Plus, etc., etc. It's all been divided up now. There isn't a single thing that everyone had. There's nothing that's going to be memeable like something like Netflix and chill was. Will the company still be around? Oh yeah, for a while, definitely. Because it's still worth a lot of money. Just not what it was appearing to be worth a week and a half ago. You know, it occurs to me, it's kind of funny that I mentioned Barnes & Noble before. Because I almost kind of see Netflix on the same track. They'll still be around, but they're never going to be what they were. That's my broad prediction at this point. Netflix. What are your thoughts on any of this mess? Whatever it is, drop something down in the comments. Let's talk about it. Like, share, subscribe. Patreons, how I pay the bills. That's why I don't have to work that sales job that I hated. Worked it 9 years. Hated it. Hated it. Any amount you're able to give there is immensely helpful. It's a blessing to not have to hold down a job like that anymore. But even if you can't, like, share, subscribe, all help me out. There's links to other things that I do. I have books that I've written that are available on Amazon. I'm on Twitter. I'm on Twitch. All those links are down in the description. But don't worry too much about it. What I really want you to remember is that you are beautiful. You are valid. And you are loved. You are the council. I'm just running the meetings. And until next time, this council is adjourned. And credits. I got to shout out my top Patreon supporters, so thank you very much to Zubin Lutfullah, Tarak, Oliver B, Melinda Walters, Leotha Boy, TT, Renobulax the Poodle, Eidolon, Tracy Scrabbit, Vincent Paul Bartolucci, Angry Caspero, Adam Lefty Taylor, Shane Ross, Robin Moore, Shayla Gourlay, and Brendan LaRose. Couldn't do it without you.